Welcome to Global Insights 24, simple tech answers you can trust. If you're looking for clear explanations, quick tips, and just a bit of fun along the way, you're in the right place. Let's dive in.
Share capital is one of the most important components shown in a company's balance sheet because it represents the money that shareholders invest in the business by purchasing its shares. When a company is formed, it issues shares to raise funds that will be used to start operations, expand projects, or meet other financial needs. The total amount of money received from investors in exchange for these shares is recorded as share capital. It reflects the ownership structure of the company and shows how much of the business belongs to its shareholders. In the balance sheet, share capital appears under the equity section, which represents the owner's claim on the company's assets after all liabilities are paid. There are two main types of share capital: authorized capital and issued capital. Authorized capital is the maximum amount of share capital that a company is legally allowed to issue as stated in its corporate documents. Issued capital, on the other hand, is the portion of authorized capital that the company has actually offered and sold to shareholders. Sometimes there is also a term called paid-up capital, which refers to the amount of money that shareholders have fully paid for their shares. The difference between issued and paid-up capital occurs when shareholders have not paid the full amount promised for their shares. Share capital can also be divided into common shares and preferred shares. Common shareholders usually have voting rights and may receive dividends, while preferred shareholders often receive fixed dividends but have limited voting rights. The amount of share capital can change over time if the company issues new shares or buys back existing ones. Increasing share capital may help raise more funds for growth, while buybacks can reduce the number of shares in circulation and possibly increase the value of remaining shares. Understanding share capital helps investors and analysts evaluate a company's financial strength and ownership structure. It shows how much money has been invested by owners and how that investment supports the company's operations. In summary, share capital is not just a number on the balance sheet, it represents the foundation of the company's equity and the trust investors place in its future. Thank you for watching this video on share capital. Please like, share, and subscribe for more educational finance content.